All right, let's go ahead and get started. All right. Okay, on Tuesday, I believe we covered just what had happened after taking out our major liquidity point or swing point that we talked about, I believe, last week. And that resulted, right, in us trying to assume, let me see, it was Tuesday the 30th. That led us to assume that we were basically going to look for, you know, the potential bearishness, even though we were still technically quote unquote bullish. So as in terms of the POI, I'm pretty sure that hit, and if not, it might have just missed. It was like a perfect tap into the POI that we had covered. That led into a obviously confirmed reaction, meaning that the bias at the time was considered valid, just due to this causing a reaction which actually breaks the internal structural range. So deleting this move here really shows, right, that the bias at the time was valid, which is why I also tell you guys that after liquidity has been met, we do not necessarily know what will happen. So we play based on the reactions of that. So I believe this was Wednesday, where we actually, I had like a closure there. But either way, we see potentially not necessarily any type of reaction here, not any type of reaction only until we reach up here. However, there was no sense of order flow here, besides taking out a potential POI here. However, this was already mitigated, so the 50%, that caused an internal reaction. However, this is a bit of a deep retracement, so seeing this, I wouldn't necessarily count it as a potential bearish move here, because we did take out liquidity and then we took liquidity out again, right? As you can see, there is an internal push here. That is my preliminary leg, the preliminary leg, and then the overall leg here from a minor intraday stance. That, in my opinion, changes the entire narrative. So, and as soon as that happens, then we can now assume this as internal unwillingness, and a previous swing point, which means that as a whole, we are still bullish. So although the bearish scenario was valid, in the end, it could not take out, you know, reasonable or much more or premature swing points, which would have been down here, and this would have been more of a major intraday here. So unfortunate, but that led into, you know, creating a new structural range, causing potential order flow disruption. That is now been taken. So as of now, right, the only thing we can assume is really a continued bullish sense. We don't really have much data to assume any type of a retracement. The only thing is that we are heavily overextended. We have seen a pretty big move. So as of now, in my opinion, any type of dip over the next couple of weeks is really incentive to want this to continue higher, and that is based on our overall bias that we talked about a couple weeks ago, where realistically this is still bullish. And now that we are taking out the POI that we had talked about, that is technically considered order flow disruption on a very big scale. That being here, we had a confirmed reaction. That reaction has now failed. The POI is about to be taken out, and that's order flow disruption, which means realistically our next target should be here. And this would obviously take a couple of months. It could be quicker. You never know. You could just see something explode. But we are seeing much more bullishness in terms of our overall bias. So, right, as of now, right, like I said, we are still technically bullish. The only thing we can technically assume right now, right, just based on solidified points, The last dip that we had was here. So as of now, right, that's the only thing that's pretty much holding price up at the moment. I believe somebody said M15. Yeah, there you go, M15. Makes a lot of sense right there. Right, so excuse me, this bounce is pretty much the only thing keeping this from collapsing on itself. And in the morning, like I said, I wanted to see whether or not we were going to see a bullish transition or not. And the reason why I sent that, let me pull that up really quick. Is this right? The reason why I pulled this up was the only reason we could assume any type of continuation to the upside is if we had a bullish transition. And the reason why we need a bullish transition is right because I'll come back to that, but from the superficial standpoint, you're technically bullish, right? And you could even argue the internal POI right there. You can argue that, but like I said, the internal transition is necessary. Why? Because we already had a failed conversion here, or a failed move here, where we had a continuation BOS. You even saw momentum internally there. And because that created a continuation BOS and failed, right, that is a variant of structural disruption, meaning that as of now, we are bearish. And that's why I was noting this, and then obviously you have this here. It's really, really hard to assume that we are going to, go up if all of the signs internally are aiming downward. And as you can see, that's why the NFP move is continuing to the downside. So, right, even after NFP, you could even assume that there is a potential bullish reaction off of the POI that we talked about. However, we did not break any type of minor intraday structure. So the scalp, although might have wanted to convert, it really just did not make sense as to why we should look for higher pricing, even if our overall structural range and from a major intraday, a swing is still bullish. So yeah, as of now, if this reaction is to take out, let's say here, this would be our bearish invalidation. Let me put that on the right. Bearish invalidation. But as of now, let's see what this reaction does and how that carries over to, like, let's say EURUSD. EURUSD, I know that we were anticipating much more on the bearish side, like we said. Only because we did have relative equal lows here, relative equal lows here. In my opinion, I'm still leaning towards that bearish bias, where this is your newly formed invalidation. And the only reason why I'm noting that is because this is obviously the last leg into the downside. We did not, react off of the POI that we had talked about. However, the bearish POI that we had talked about did, and that is what's pretty much the catalyst as to why we are continuing lower. So as of now, right, I am still bearish on this, right? Like I said, internally DXY is still bullish from the major and swing sense, but from a minor intraday sense, right, this has to convert into a bullish sense in order for this to be converted into a bearish sense. So that's something to look out for next week. As of now, we still have liquidity to be taken there. And by that, I mean equal low 1, equal low 2. If we are to continue lower, like I said, we do need that bearish transition, but I am still leaning towards that bearish bias on here. AUDUSD, this is kind of one that played out to the T from what we had talked about, I believe it was 2 weeks ago, the 30th. Or last week, I'm sorry. Yeah, from last week, where we had talked about potentially only reaching previous structure. That is played out, very, very nicely. I wonder if anybody traded this. I didn't see anybody trade this. But yeah, this is a very, very good scenario, something to look back to for maybe last week's Zoom. I believe it was last week's Zoom. But yeah, this one, I am still a bit bearish on it. However, there is something to be alert of, which is, right, we know from a monthly POV, right, we already pointed out the POI that we talked about. We have a very, very deep retracement. Oops, wrong one. There we go. From the weekly perspective, we already know, right, that potentially we already had our bearish structural disruption. We also know here that we do have a bullish liquidity grab based on the two blue lines. So as of now, this is still bearish as a whole, but we are to be, you know, a little bit cautious, at least for the next couple of weeks, to see if this 3-month POI can be something of relevance. Because as you can see, the only things that really stand out to me, one, are a potential turbulence point here, and two, this is where the character shifted, and that is where that is at the moment. So just something to be wary of, where the character shifted. I'm sorry, let me get closer here. There we go. All right, so although we are bearish, we must also look into, you know, this change of character shown here, and this obviously causing an internal reaction. So now if this is to, you know, let's say align with us, or align with that and give, you know, a very strong push to the upside, where in my opinion the bearish invalidation would be here. Right, the reason why it's there and not here is because this is a continuation BOS. This continuation BOS, right, is pretty much solidifying high-low retracement continuation. That's what that's signifying to me. So this is our bearish invalidation. However, if, like I said, if we are to take this out, then realistically, right, any type of move here with a bullish transition, because obviously we're talking minor, major intraday move, right? If we see the transition anywhere here, then this is potentially, you're looking at a very, very big transition. But that is a little bit optimistic based on the information and data that we have now, but just something to be wary of. But yeah, does anybody have any questions with this? Let's see, got the chat. Got a queue with EU. No, I don't. Go ahead. Yep. When was the point for you to think it was bullish? That. Well, why would you be bearish? And I pointed that out. I said this. I said this here. I said this is the preliminary leg. Yeah, the preliminary. Let me see what time frame. I think that was 15. Yeah, this is the preliminary leg. right? So this continuation BOS here is technically the solidification of the internal range, continuation BOS, reversal BOS. This solidifies the range. So although technically you could hedge here technically based on order flow, you can hedge. However, here is where you would technically, look for some sort of bearish transition, which didn't happen until after the reversal BOS, which would have been here. So hedge on now another potential hedge, one of them is going to win. And the reason this is a hedge at first is because technically we're going based on the major intraday reaction of the POI that we had talked about. I forget where it was. I think it's here or somewhere around here. That is a hedge because technically this reaction makes the POI valid and the bias valid. But we would only play based on that initial bias is if you had a conversion here, but you didn't get the conversion until after this. So now this is considered a hedge, because after we take this point out, that is a bearish invalidation. So this is now a hedge towards the bearish invalidation, but the initial entry was a hedge based on the bullish potential invalidation based on the reaction of the POI. So you're playing both sides technically. And either way, one has to win. Yep. All right, cool. Does anybody have any questions? Okay, cool. So this is going to be what I'm working on for YouTube. I remember I brought this up like a couple months ago. Not months. Has it been months? I don't know. Where I said I was. No, I think that's right. Where I said I was going to talk to a couple of members who have actual models, and I wasn't going to copy their models. I was going to figure out what they did specifically each to get it and see if I could find any commonalities. So that is pretty much going to be what this section is for, but I'm pretty much, this is kind of what I'm thinking of doing for the YouTube. And that's taking obviously these two posts and making them into a video. So, and I mean, I could pretty much give you guys a rundown of why a trading model is essentially the way to go in terms of not only with RCV people, but I think trading in general. And I go through that unless you guys have some quick questions. Okay, cool. Nothing, don't worry about it. Okay, so this is pretty much what I'm gonna do with YouTube next, and the only reason I'm doing that is because we have a pretty big audience here, in my opinion. And I haven't posted in 10 months, which is kind of what I'm thinking of here. But trading models would be broken down into 3 different videos. Why, what, how, in that order. Why trading models, what trading models, how trading models. And it's pretty much going to be the rundown as to why this is important, why this is our preferred method of, you know, going about your learning process, and with why, right? So the biggest issue with, in my opinion, with people that teach these days, just based on what you guys have told me, based on the feedback that I've gotten over the past 2 years, or yeah, 2.5 years, is that, right, obviously we're going to exclude the whole, you know, people that scam and people that don't fulfill the promises that they give you. That's out the picture. I'm talking about people that actually genuinely care to teach. The biggest issues, in my opinion, with those people are that one is the mimicry trap. The issue with the mimicry trap is that essentially somebody's trying to teach you their derivative. And I can even say that this was my issue too when we first launched RCV, because the question when we first started RCV was always, how do I make this digestible so that somebody can replicate and or create a derivative? That was always the question. So in my opinion, like I said, the biggest issue with people teaching is that they teach you a derivative, not how to get a derivative or how to make a derivative. And the advantage of that is because you want to understand somebody, not copy them. The mimicry trap is, you know, it's just based on the name, is that the trap based on mimicking people, and that is that you are copying, not understanding. And I mean, easiest example is school. If you copy somebody, you're not necessarily learning anything. But if you actually study and pass a test or whatever, blah, 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 then you're actually understanding material and are able to apply it. So the mimicry trap is kind of correlated to survivorship bias. Do you guys know what survivorship bias is? Have you guys ever heard of that? No, okay. Has anybody ever heard of survivorship bias? So this is kind of like the Google definition, but survivorship bias is mistaking a subgroup for the entire group. And so just correlating that to trading is, for example, everybody sees the successes, everybody sees the wins, everybody sees the outcome or the favorable outcomes that are, you know, and that's just because of social media, and social media is kind of the place where people only post winners for the most part. And the issue with that is that you don't necessarily see all of the losers, you don't see all of the statistics, right? Because for many people that don't know, it's like way less than 10% of the people who actually trade profit. And it may be because of the market, it may be because of the individual. I blame both, if I'm being honest. But, you know, coming back to survivorship bias, right? Because you have such high expectations based on the winners that you see, right? We are exposed to much more successes than failures, which builds an incorrect sense of judgment. And that's why you come in, and not only that, but the barrier of entry into trading is extremely easy. You could start tomorrow and start trading by the next week. The barrier of entry is extremely easy or extremely simple. So therefore you are entering, or you're attempting to trade with the odds already stacked against you. And by odds, I mean, you know, the odds of you the odds of you profiting in general is extremely low. Plus you have unrealistic expectations. Now you're trying to copy somebody's derivative. Like it doesn't make sense as to why you believe that, you know, that entire way of going about this is, you know, going to lead into your successes. And that, you know, many of us have been there. I'm pretty sure everybody in this call has been there. And, you know, you learn the hard way that you have to take the hard way. So that is why, you know, like I said, details matter. And that is where trading derivative comes in. The trading derivative, I kind of just made this definition up right now. I started on this like an hour ago. But a trading derivative is a system based on prior research and refinement, and that is completely based on this model that I made last year. Or was it last year? Yeah, last year. Where your derivative is essentially your foundation plus strategy, and then your foundation plus your strategy equals a trading plan which is then, you know, combined into making a trading model. And the difference with the trading plan and model, right? This is, right, like I said, your foundation plus your strategy. This is what you are trading, and the trading model is how you are trading it. So a derivative is a system, and a trading model is the applied version of the system, right? Which is what I put here. So I'm still working on this. Hopefully I could have it done by the end of the month, but I also have a couple of other things I need to take care of. But yeah, I'd like to know what you guys think. And if you guys like it, if you guys don't like it, if you guys could add something to just what I have here right now. If not, I'll probably show you guys the full version once it's done. Like, I just want to make sure this is fully thought out before I put it on YouTube. Cool, no opinions? If not, I mean, I'll just go ahead and end the Zoom if nobody has anything to say. Cool. That's exactly where I am in that process. Looking forward to it. Cool. But yeah, unless you guys have any more questions, is there anything you guys want to go over before I end the call? Cool. Alrighty then.